Welcome to ETF Battles. I'm DeLegge. One of the reasons I love ETF Battles so much, besides giving me self-serving therapeutic benefits, is because it provides us insight into your manias, your obsessions, and your general lunacy. And when we're barraged with matchup requests for the same ETFs over and over and over again, it tells me that you guys are more obsessed than a 7-ounce bottle of Calvin Klein Obsession. This is the second time in a month we're featuring the same ETF in a battle. This is ticker symbol NOBL, and it's because of your maniac obsessions that we're doing it. So congratulations, I hope you're happy. Today's ETF battle is between the ProShares S&P 500 Dividend Aristocrats ETF, that's ticker symbol NOBL, versus the Vanguard Dividend Appreciation ETF, as ticker symbol VIG. Both of these funds track dividend-paying stocks, rather obvious by the fund names. But helping us to judge today's matchup is none other than John Davi, founder and CIO at Astoria Portfolio Advisors. And we've got Todd Rosenbluth, head of ETF and mutual fund research at CFRA, the best in the business. Gentlemen, I'm honored by your presence.
Great to be with you.
Good to be here, guys.
So the 4 battle categories are cost, yield, performance, and then our mystery battle category, which you guys get a chance to basically determine what factor or multiple factors are important to this particular battle. I have no idea, nor do any of our audience members, what the mystery category is going to be because it's a mystery. So my scorecard is ready, as you can see. It's blank, and I'm going to fill this out real-time live as we go through each one of these battle categories. I should also mention that split decisions are a possible outcome. So that's an important element of the program. So you've got 30 seconds to go in each battle category. Our first category is going to be cost. Let's start with you, John. You've got 30 seconds, go.
Yeah, so VIG is 6 basis points versus NOBL, which is 35 basis points. So I think, clearly it wins from that standpoint. Also, VIG is more liquid. It trades about 160 million notional per day, whereas NOBL is about 38 million. So I give the edge to VIG from a total cost, ownership, and execution of abilities standpoint. So VIG wins in my eyes.
Thank you for your analysis. Let's move to Todd.
So John took my words out of my mouth. So VIG is just cheaper. It's more liquid. It's a much more cost-effective ETF. There's absolutely no reason, if you're paying attention to cost, not to be choosing VIG. So I'm glad we're in agreement.
That's the second time in 5 years you guys have agreed on something. So congratulations.
Hairstyle was the other one.
Very good. So let's move on to the next battle category. This is a big one for dividend investors, yield. Let's stick with you, Todd. Who wins the battle?
So in this case, NOBL has a higher yield. It's over 2% as of the time we're taping this, whereas VIG is under 2%. It's going to come down to the exposure that we'll get to later on. But neither of these are high yielding. You certainly have higher dividend yielding ETFs that are available. When you're focused on dividend growth characteristics, as these ETFs are doing, there's more of an earnings growth to drive that as opposed to a stock price falling. So NOBL is the winner in this, but again, it's not by much.
All right, very good. Let's move on to John. What's your take on yield? Who wins?
I like VIG because it's a little bit more diversified. I don't think anyone should buy an instrument just because it yields, higher. I think you want to look at, what's underlying the ETF. And, VIG has a pretty large allocation towards technology. It's about 17%. NOBL has a couple hundred basis points of tax. So I think that's, what's driving some of the more outperformance, which I know we'll talk about shortly. But, I kind of give the edge to VIG just because it's a little bit more diversified, even though it has like slightly lower yield. But, as Todd said, not by much. I still would prefer to own VIG over NOBL.
Okay, let's move on to the next battle category, which is performance. Let's stick with you, John. Who wins the battle?
VIG has better year-to-date 1, 3, 5-year numbers. I think it's more of like a core solution where you can own kind of VIG as a placeholder in the portfolio. NOBL for me, is kind of like a satellite. It's got 50 stocks, whereas VIG has like 225 stocks. Bottom line, we've had like this tech-induced growth market the last 10 years. So VIG has outperformed because I believe it's had much more higher allocation towards tech stocks compared to NOBL. So I give the edge to VIG.
All right, very good. And let's move to you, Todd, who wins the battle on performance between these two dividend ETFs.
If we look backward, it's easy to see VIG as the outperformer on the metrics that John touched on earlier. Year to date, 1, 3, even longer term than that, although we at CFRA don't think you should look too far back in the rearview mirror. You should be looking forward. I think it's important just to highlight, because I don't know that we'll get to it in other categories, that there is a clear distinction between this. VIG looks backward to the last 10 years, and NOBL is the last 25 years. And so we've had dividend payments of some of the more cyclical sectors, like technology, like healthcare. That's more of an up-and-coming tech player as opposed. But VIG has certainly been the outperformer.
Okay, very good. Let's now shift to our mystery battle category. Todd, you're still up. And tell us what your mystery battle category is and who's the winner.
So we've touched on cost, we've touched on past performance. I'm going to focus on the reward potential as we look forward. And we find VIG to have a higher rating the way that we at CFRA look at the underlying holdings and we look at the performance record from a forward-looking perspective, looking at the underlying stocks, looking at the sectors. Again, you have more of a growth tilt, technology, healthcare, overweighted, more exposure to materials in NOBL, which is not something we feel favorable in this environment. So you want to look under the hood from a go-forward perspective, and we think VIG looks stronger.
All right, very good. Mystery battle category for John. What is it and who wins it?
Earnings. I think earnings is ultimately, one of the key inputs into our portfolio decision-making process at Astoria Portfolio Advisors. If you look at NOBL, its earnings were derated pretty significantly on a relative basis compared to VIG. VIG held up, in the March downturn. So I think, VIG is a little bit more higher quality in general. You are paying a couple of valuation turns more for it, but I think it's kind of well rewarded. I do like technology. I think we're living in this world where Fed funds is anchored around 0%, and I think multiples are going to be a little bit higher on average compared to history. So I don't mind paying a little bit more for VIG. I give the edge to VIG.
All right, we've moved on to our final overall battle winner, and we're going to let you judges recap this. We're going to start with John. Who's your overall winner between NOBL and VIG?
VIG for me is the winner. It's more diversified. I think the earnings are a little bit better. It's had a little bit more diversification, more technology exposure. Tom made a good point about how it looks back 10 years, and technology stocks in the last 10, 20 years, ever since the dot-com bubble, have really kind of shored up their balance sheets, and a lot of these tech stocks have been kind of starting to pay dividends. So I think you're going to get that picked up in VIG. And I like VIG overall better from like an earnings fundamental standpoint, more diversified compared to NOBL.
Thank you, John. And this is your final chance, Todd, to weigh in on your overall battle winner between these two dividend ETFs. What is your take?
So VIG is the winner. I'm sorry for folks who seem to be requesting NOBL multiple times.
They're maniacs.
VIG is the cheaper product. It is the better performing product. It looks better as we at CFRA look forward from a holding standpoint. VIG is the stronger product if you're looking for an ETF, regardless if it's dividend or not.
Well done. Thank you, judges. And I really enjoyed today's episode, not only because you guys agreed, one of the rare times you agreed on most of the battle categories, but my battle scorecard sums this up. VIG is clearly the winner. It beat its opponent, NOBL, in just about all categories except yield. Yield was a split decision, but everything else, VIG won on cost, it won on performance, it won on the mystery category, and each of our judges agreed that it was the overall battle winner. So nice to see you guys agree on something for a change. One thing I want to say about today's show that I think you guys raised some great points, like about technology, which traditionally hasn't been thought of as a dividend-paying industry group or sector. And we see the maturation of the technology sector as a whole, really, from the 2000 dot-com bust up until now, it's a much different sector today than it was back then. And for that reason, many people are looking to have tech pay dividends. And we're seeing those types of stocks being included in many dividend-paying ETFs. So thanks again to our judges for an excellent job. Well done. And we look forward to catching up with you guys soon. If you'd like to send us a note, tell us which ETF battles you want to see. Hit us up in the YouTube comments section. Be sure to hashtag ETF Battles. Same goes for our Twitter feed. At ETFguide is where you find us. And be sure, again, to hashtag ETF Battles. I'm Ron DeLegge. Thanks for watching ETF Guide TV. And until next time, watch the battle before you invest.